Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the crosses for September 17, September 21, 2018. And on the crosses side, the relative strength, relative weakness trade really starting to take shape here as we ended the week. And it may be sort of very obvious at this point, and maybe key obvious trades, but they really look good technically. And I think they're worth taking a shot at here with a few caveats. So looking into the end of the week, the key things that really popped out at me was the relative strength of the pound and the relative strength of the caddy on the COM dollar side. And when you combine those two ideas, the trades that naturally set up were the short euro pound trade and the long pound yen trade for the pound strength trades, and the short Aussie CAD trade. The caveats, and you'll see this on the charts, is that in some cases we are going to be moving right into the key resistance and support levels, which of course, if you take the view that they're meant to be broken, provide really good opportunities, or you can take the opposite view that they are just there to hold and could provide a really, really big stall. Let's take a look at both charts on the pound side and just see how things shape up over there. Let me just get into my crosses section. Here we go. So euro pound is my first look, and first one to admit, first of all, we're in a long-term upward trend, right? But remember, an upward trend that's correcting to the downside with a real big temptation here to close the move to the moving average, right? If you believe in mean reversion, this is a key mean reversion move here. The one thing that really bothers me about laying down the short right over here is this support at the 75, right? But if the supported 75 goes, and maybe this is the right way to think about this. If we get into the 65s, 88, 65s or lower, that really puts massive momentum pressure for a test to 88s. And it's in many ways really a trade on the euro weakness rather than pound strength. But we do have mildly bullish pound data on the CPI front at the beginning of the week. We seem to have, and this is very, we seem to have a shift in Brexit negotiations where the Europeans have decided, okay, we're going to get serious about making some sort of a deal with the Brits. The one exception to the rule is they're certainly not going to make the Irish border a closed border. The Brits, on the other hand, really have to make a decision at how political they want to get, because if they want pure autonomy from Europe and yet access to the European market, this is their best chance ever. And I wonder if they're going to sabotage all of their Brexit desires, over the non-issue of the Irish border in many ways, because it really is irrelevant to the grander scheme of the UK being independent of the European Union. We'll see. But the point being is that the market is acting like cable is bid. Price-wise, I'd love to see the 88.65s go to really, really get comfortable with this short, but this looks to me like a pretty interesting short. If you look at on a very small time frame, sort of the last month, you have a clear failure of lower highs and a momentum acceleration move here. So I like this trade. The punt, you could take the punt here and just very, very tight stop against like 89.50. That would, if we come right back and choke our way back up to 89.50, then both the euro short story and the pound relative strength story are really clearly not working. But so it's not a lot of risk here. But the acceleration to the downside, if it does happen, I think is worth playing, because there's quite a lot of room here. Between here and there, there's literally almost 100 points worth of room for basically 50 points worth of risk. So pound yen, the inverse of that, which is you like the pound strength. Dollar yen seems to be relatively well bid. Same kind of a story as a dollar yen story. The hesitancy here is the massive. It's really the failure of the yen leg that could hurt this particular trade. This is why if dollar yen can even if it clears 12.35 or so on a closing basis, would provide a better structure than just right now. Because right now, buying this right now into this double top technically not a great idea. But if we close through 47 on pound yen, it'd be like, let's say 47.50 just for clarity's sake. If we close through 47.50, that really opens up the run all the way up, literally all the way up to 49. And it's a very, very bullish construct. So, you know, I'd watch those levels. Of course, the danger with pound yen is it could become a runaway train. And in many ways, maybe what you should be willing to do here is, if we clear, even on an intraday basis, the 47.25s, just take a big gulp and buy on an intraday basis on the assumption that we're going to sweep up towards the 48s, 48.50s on a momentum move. Then the last cross trade is just the CAD relative strength. This has been a long-term downward trend, right? So it's a very slow trade, very small movements, but pretty consistent trend to the downside. We had a few counter trend moves here with the Aussie rising, but as we open up the week, and you like the idea of loonie being relative bid, and you think that the Chinese trade issue does not go away, this really opens up scope here for a move all the way down, effectively down to like below 93, 92.50, and possibly fresh lows against this move, because Aussie is so much more vulnerable to Chinese trade woes than CAD is, and the possibility of upside surprise on NAFTA, which I still think will happen, because the whole idea here is that Trump can't get the deal with Mexico if he doesn't get the deal with Canada. And for him to walk away as a failure at this point really hurts him very badly, given the fact that he's so despised and so low in the ratings, in his popularity ratings, that he needs a win. He needs a policy win. So I wonder if they're going to be able to make the deal here, in which case that only adds to the AUDCAD to the short side. It's not a bad, you know, it's a slow, low, quiet trade, but very little risk here. The risk to the upside here effectively is just 94, right? So it's 75 points worth of risk. The possibility here all the way down to maybe 92.50, maybe even all the way down to 92 on a strong pro-Canada move. So that's how the week shapes up in crosses. I wish you guys the best luck, the best of trading. Boris Landsberg, over and out.